Hey everybody, welcome to week 66 of the Ag Commodity Corner Plus podcast. And today is the 10th of July 2026. It was a big day with USDA giving us an update. Mo, what's the title for this week's?
Bullish USDA July crop report. This is rare, so we're going to take it as a big win. Let's get started. This is your weekly summary quote chart, and I've highlighted a lot of the grains because they were all in the green. In fact, wheat was a technical breakout to the upside. We'll get into why that was. There's some new news out that I think is driving it. And we had natural gas, one of your inputs, dropping to new lows. That's good news. So let's get into this USDA report.
The USDA report, like you said, Mo, is bullish for all the three main grains. So corn ending stocks for 26-27, they're on the right, coming in at 1.79, sharply lower versus what the trade expected and last month as well. Soybeans unchanged versus last month, but lower than expected. And wheat also lower versus last month.
So if you look at this whole crop here, the USDA.
You mean new crop,
Oh, sorry.
26-27.
Yeah, sorry. So the old crop here. Okay, the USDA. So the 2.02 came down because the USDA increased ethanol by 25. Don't know why when the pace is lower than the USDA at 1.3 versus 2.6. And then they also increased feed and residual, which is going to be a head scratcher for a lot of analysts and experts because they thought that was too high. But maybe the June stocks report showed a lot of disappearance in usage. So that was up 150. But my big bone with the USDA is exports. Up 24%, up 215 million more than their forecast at 3325, and they left it alone. This number 20, and we've been talking about this for months. This 202 should be closer to 18, and this 179 could be closer to 16. So you got 2 months left. What is Brazil gonna compete with U.S. corn to take that demand? Guys, the USDA is not telling you this bullish export demand story, and the funds have no clue what's going on. I think they're wrong. I think they keep selling this corn market. Corn market continues to underperform both beans and wheat, and they need to get with it. But I'm very bullish long term. The longer we go, the higher these prices go. Before you move on, soybeans at 310 for new crop. So this number here, that is bullish. You drop yields by 1 bushel, and we get very, very tight. And then, of course, wheat didn't. I was hoping for wheat to break 700. We didn't do that. I think the yield is still too high. They actually increased to 47.9 because acres came down and harvested came down. But it's getting tighter. But I'll talk about wheat here in a second.
Let's look at wheat in the latest update as far as all wheat for 26-27 US came in lower versus the prior month's numbers. So all wheat coming in at 1.536 versus last month at 1.543. HRW again lowered to 0.471 versus last month at 0.497. And SRW also lower. All the wheat, the different flavors of wheat are lower year on year.
Yeah, so I think this HRW number still comes in lower. I know the trade thinks that it's all priced in. We got 60% of it harvested, but I still think it comes in lower in future reports.
Also looking at the global numbers, corn there a lot has to do with also what's happening in Europe and France and the issues that the crop there is facing. So corn global estimates for ending stocks 2026 came in at 275.26 versus last month at 281 and versus expected at 279. Soybeans also lower versus expected. Soybeans at 124.17 versus last month at 124.88 and expected 125. Wheat also lower versus expected in last month.
Look, U.S. domestic ending stocks are dropping. Global numbers are dropping. This is bullish.
And finally, looking at the South American numbers, not a lot of change for the Brazilian crop, which again continues to be heavy. On the Argentine side of things, USDA raised the 25-26 corn crop to 63 million metric tons versus last month at 61, and that's higher than expected. Soybeans came in similar to last month at 50 million metric tons.
Not concerned about South American crops anymore. This is old news. What you need to start worrying about is 2027. We'll get to that here in a second. So this is your December corn chart. You can see it's higher than last week's close, and we're approaching that 200-day moving average. You can see we're breaking back above this bearish channel trend that we've created in the month of June, and it's just a matter of time. But I think over time, depending on what, so now that we've got this report out, weather on Sunday night's going to be key. Is that 8 to 14 day forecast into the end of July going to remain hot and dry? If it does, you're going to see a pop above that 200-day moving average. And then this is soybeans. You remain in that bullish uptrend channel. It's just a matter of time, but China is buying in volume, and that's going to continue to drive prices higher. And this is Kansas City wheat, the double bottom. We've already retraced 50% of the this decline here, and I think once you break above the 680, I think it's just a matter of time. You get that post-harvest rally into the end of July, August, that probably retest those highs. So why is wheat rallying? Because the Bay of Azov in Russia, so Putin is starting to run. If you've heard the headlines, Putin is starting to ask for an end to this war because I think Ukraine is winning with these drones. And the Bay of Azov is a shipping lane for Russian exports to Egypt, Turkey, and the Mediterranean. There's some security risks for shipping through that lane right now because Ukraine is winning with these drones after a 4-year war. And I think that was part of the reason, some talk, trade talk, rumors, that's why wheat was going up. So this report was friendly, but I think news about that also added to the gains this past week. The weekly close is very bullish going into next week.
Let's look at the main reason why some of those futures are rising. So the next 10 days remains hot, dry for the Canadian Prairies, U.S. Northern Plains, and the Western Midwest, but models are in disagreement.
So let me stop you there for a sec, Abhinesh. This was Sunday night, Monday morning. So if you remember last week, we talked about this heat dome in the Midwest. It was only going to last for a week. Nobody thought that it was going to last much longer. So Sunday night comes along. It's hotter and drier for the 8 to 14 day. And they were forecasting 10 to 13 degrees above normal for the grain belt. But then came Wednesday. It became wetter and cooler. And then Thursday, which was yesterday, it was hotter and drier again at the noon update. And the GEFS is the American model, the EPS is the European model. And you can see that the American model is trying to throw a little bit more cooler weather into the forecast. So a lot of the meteorologists are saying do not believe anything beyond the 5-day because these weather models are flip-flopping, they're confusing to watch. And there's that blue blob that they're trying to put into that forecast.
Weather, basically, like you were saying, it remains threatening for U.S. corn, and crops are getting smaller as U.S. crop conditions will continue to fall into next week. The U.S. has too many excess moisture regions in Illinois, Indiana, and Ohio that have had yellow plants ahead of July 4th, and that tends to result in below average trendline yields.
So be careful what you wish for. This is a chart showing you severe weather in the United States. If you remember in the month of June, we had a very wet June forecast, and with that rain came severe weather. These are tornadoes. in Illinois. Did Tornado Alley switch to the Eastern Corn Belt into Illinois? 169 in the month of June, 3 times more than the average. 150 claims in Central Illinois, 1,500 in the South. This is what it's doing, and it's widespread. And you think there's a record crop coming? The funds thought in June 187. You think it's a 187? Give me your comments in the YouTube comments, because I don't think so. Remember, crop conditions are lower than last year, so I don't think you have a record crop on the horizon. It's maybe trend line or lower. 183, we're at 182. I think the bean trend line is 53, we're at 52. We still got to get through the month of August, but that's 2 weeks away. And this is my concern. This is minimum temperatures, nighttime temperatures. The Eastern Corn Belt, whoa. You increase the nighttime temperature during corn pollination in the next 2 weeks by 1 degree, it reduces yield by 2.5 to almost 5 bushels per acre. On beans in August, it's as much as 10%. I think we're doing some damage, guys. And I know maybe they've lowered the threat next week. Maybe the temperature's not as high as it was. And it's mostly located up here, maybe into Minnesota and into the western Midwest. Maybe it doesn't touch the Midwest, but I think we're doing some damage between all that wet weather in Illinois, Indiana, Ohio, and all the dry weather in the Western Corn Belt. It's hard for me to suggest that it's a record crop. And then this is just a map that shows the stress degree days. In other words, how many days above 30 degrees Celsius, 86 Fahrenheit. This is from July 11th, 24th. If you get a reading that's 140 or greater, you're dramatically lowering the yield. So we'll need to see this map updated over a longer period of time. But I think there's enough stress here for more than 1 or 2 days that is stressing this corn crop. Don't forget to try our program. This week we were talking about the pre and post USDA July crop report, the game plan, what should you do, what shouldn't you do, all that fun stuff. So try it out.
Let's talk about this super strong El Nino. Forecasters warn that the super strong El Nino for South America historically intensifies and triggers severe weather and provides a very hot, dry pattern drought for the start of, and could provide that for the start of the 2027 South American soybean crop, which starts in September of 2026. The last time we had a similar issue was in 2023.
So maybe you're not bullish the U.S. weather. Maybe you do think there's a record crop coming, but you know what? It doesn't matter. Why? Because the next trigger, the next panic button that the funds are going to do, just like they did on Monday, is come this super strong El Nino. Because in 2023, we had an El Nino, not a super strong. By the way, do you guys know what the Asians call this super strong El Nino? They call it Godzilla. Anyways, in 23, soybean yields dropped by more than 10% below trendline yields. And then if this, and the Climate Prediction Center said that it's going to last through the spring of 27, so that's going to also impact the second safrinha corn crop. So this will be your next trigger. Oh, well, and on top of that, as Abby and I said, you also do damage to the U.S. Ontario crop because it's a very slow, wet, cool harvest, so it creates some quality issues. And then in the Canadian Prairies, it's a killing frost. These strong these El Ninos, or in this case, the super strong El Nino, can create an early frost. And, Canadian Prairies were so wet in June, flooding, 200% above normal precip. Now they're going to get a heat wave into next week. Not a great setup when you've got canola flowering into standing water, and then potentially 2 to 3, 4 weeks later, you get a killing frost. It can destroy your crop. Your production risk in Western Canada is too high. Be careful what you are selling ahead. Honestly, put up some more storage, harvest the crop, go sell it next year, because there's just too much production risk.
The other major factor impacting the grains markets is these Chinese purchases of U.S. soybeans. The tracker, as far as Chinese purchases of U.S. soybeans, currently is at 9.77, and that is off the 25 million metric ton target or pledge that they had earlier on. Over the last couple of days, we've been getting more daily flash sales, and sales include not just the Chinese numbers, but the ones that go to unknown as well. That has to be China, right, Mo?
Abhinesh, how do you spell unknown?
CHINA.
You got it. It's China. Look, they're almost buying 1 million metric tons of beans per week. It started this week. It's going to continue. There was talk again today that they were going to lower that 10% tariff on beans and grains. The date is October 1st, but I think they're going to continue to buy as a hedge against the super strong El Nino against South America next year, guys. I'm trying to give you the prediction, the outlook. You need to do a better job of providing that outlook long term to get this right. But all those naysayers need to go back to school. That's all I got to say. End of story.
Let's focus a bit on the war in the Middle East. Trump said that the US and Iran have agreed to continue peace talks while insisting that the ceasefire is over. US and Iranian forces renewed attacks this week. Officials from Iran have accused the US of violating the preliminary deal signed last month, citing violations of Iranian adjustments in the Strait of Hormuz. Mo, is all of this just noise now?
It's a big bear. Who cares? It's noise. This means nothing. And crude oil is up a little bit from last week down to that 67, now 71. It got as high as 75, 76. Look, both parties can't afford this. So stop. I don't understand what the problem is, but I think Iran wants to control that strait, and Trump doesn't want them. They want to charge fees, and if you go the wrong way down the strait, you're violating something. I mean, it's crazy. But so I think long term, you guys know what we think. We're going lower, period.
Let's finish off with the latest CFTC update. And the managed money funds, as you guys can see there, the week on week change shows serious buying in the grains, especially in corn. So on a week-on-week basis, managed money funds bought upwards of 58,000 contracts in corn, flipping the net position to net long now. So we're net long 12,659. They bought 37,000 odd contracts in soybeans, taking the net position to 68,679. More buying in canola, in cotton, and if you put the combined position together, they've bought a net 130,799 contracts, and that takes the combined net length to 183,206. That's versus around 50,000 last week. Where do you think the funds are in real time, Mo?
Yeah, I forgot to include the grain and oilseed chart, but we're starting to flip back up. They almost went back to even on the grains and oilseeds. Now we're long on average, as Abhinesh said. This corn number here, 12,000, I think after this week's performance, you're probably, I wouldn't be surprised if you're long 50 to 60,000 in real time in soybeans. I wouldn't be surprised if you're back to being long over 100,000 contracts. So, you know what? I think the lows are in, folks. Typically, the last 5 years, the lows come in early August or mid-August, but there's an offsetting factor called Godzilla, Chinese demand. And this is going to continue. So again, those naysayers, what can I say? Anyways, we'll leave it there. Thanks for watching. Don't forget to subscribe to the channel. Till next week, enjoy your summer because it's almost over. Bye for now.
Bye, guys.